What do you think? We got a lot of currencies moving around. Obviously, what we're seeing in Europe and also in Asia. But let's talk about the dollar, the strength of it or the lack of it.
Right. I mean, this is a big year for the FX market. We've seen an incredible expansion in volatility in FX, and that's causing a lot of pain for companies across the globe. A lot of companies have basically become complacent, I think, with FX hedging, but they're starting to feel the consequences of it. But we wonder, at this point, whether if they start to hedge, it's a little bit too late because we have seen, as you said, a very strong dollar rally. And with the U.S. inflation data coming out in just an hour and a half or so, we may start to see the dollar give back some of its gains as central banks start to slow their tightening cycles.
And so what's your expectation? If we were having this conversation 6 months from now, but where do you think the dollar really will be?
I think 6 months from now, we're going to see the dollar, probably lower than where it is. Because if you think about it, what has been driving the dollar higher? A lot of it has been the behavior of the Federal Reserve and the aggressiveness and the underlying strength of the U.S. economy. Inflation, they've been wrong on inflation for a very long period of time, and they're trying to catch up. But with today's inflation data, while Powell made it very clear on Friday that they weren't going to flinch on the first sign of softer inflation, we're seeing the categories of softer inflationary pressures broaden. We know that gas prices are lower. We know that car prices are lower. We know that truck prices lower. But airfares, electronics, clothing, and affordability in general is starting to become a greater issue. So there could be a situation where the Fed, who's basically said that they're not going to have a recession, we're just going to see a soft landing, be as wrong about growth as they are about inflation. And that's what I fear. And that's why I think, we're going to be at terminal rates 6 months from now. And at that point, the market's already starting to think about what comes next. And all of that is going to feed into profit taking in the greenback.
So what's the trade? Is there a trade you think that makes sense in this context?
Well, keep an eye on dollar yen because the Japanese are very uncomfortable with where the yen move has become. And with the dollar really seeing overstretched gains against dollar yen, I think they're not going to stand in the way of a stronger reversal. The Japanese doesn't like a strong yen, but we're at a juncture where, a lot of financials are being affected. So, I like selling dollar yen. I think it's going to move lower. And I also, think that in the longer term, we're going to see more strength in the Canadian dollar as well.
Strength in the Canadian. What about the euro? What about the euro? What about the pound? For those of us who like to make their, a nice trip to Europe these days.
You're right. I'm kind of side-skirting that. Euro had dropped below parity. I think that's pretty much the bottom we've seen. We're obviously above parity right now. The ECB has been, and both the ECB and the Bank of England has been, much more realistic about recession as well as weaker growth ahead. So I think they're going to manage their monetary policies more appropriately. The markets have been able to discount their expectations more aggressively. So I think the euro, which both the Eurozone and the UK are worried about tougher times ahead. I think they're going to see a bit of weakness now, but we're probably seeing the bottom of both of these currencies.